Hello and welcome to this conversation on BloombergQuint. Sanjeev Sanyal, Principal Economic Advisor to the government, is joining us from Delhi to share his thoughts on what we all thought here in Bombay was a fairly dramatic development coming in yesterday. The Reserve Bank of India deciding to take 12 of the largest bad loan accounts and say that they need to be resolved under the Insolvency and Bankruptcy Code. Sanjeev's with us. Sanjeev, thanks so much for taking the time to speak to us. I guess my first question to you, Sanjeev, is that, this is a all hands on deck kind of operation. So my first question simply is that is the Finance Ministry, the government on board with this, in agreement with this, while recognizing that there would be implications perhaps for bank provisioning requirements and maybe even for some core sectors like steel and power where these NPAs are centered?
Absolutely. We are working together with the Reserve Bank of India. I mean, as you may have seen, this is only following on from the ordinance that was put out about a few weeks ago. So you can see that we are working lock-in, absolutely marching in step with the Reserve Bank. It's very much a coordinated approach.
Sanjeev, what do you see the next steps? So how do you see this process sort of unfolding? I know that a bunch of questions have already been asked you through media interviews this morning on, the insolvency code being untested, etc. But to your mind, and I'm sure you all have sat down and charted this out, how do you see this playing out?
So right in the beginning, let me recall for you, the fact is that this NPA problem has been festering for many, many years, as you know, and has been growing. Many attempts were also made to try and solve it, incidentally.
Yes.
Unfortunately, what has happened is that these early attempts didn't work. There was even a discussion about creating a bad bank and so on. But what we ultimately decided was that we will take advantage of a peculiar feature of this round of NPAs, this particular episode, which is that the problem is very concentrated, something like 40-50 cases. And in fact, some 6-7 sectors account for the bulk of these bad loans. So the idea then was that since this is the case, we can perhaps, for this lot, we can probably take a customized approach. And so the idea was to create oversight committees and make sure that on a customized basis, what they will do is that they will take up these 40-50 cases and resolve them one by one. The oversight committee will basically bring in everybody, all the lenders and the defaulter into one room, make sure that the process is right and that whatever they decide amongst themselves is ultimately then is complied with, the agreement is complied with. Now this is essentially the first 12 of that series, so to speak. The names will be shortly announced by the Reserve Bank of India, but they are a significant number because they account for 25% of the bad loans. So this is really the big boys, so to speak. And the idea here is that now that the bankruptcy process has started, by the way, let me clarify that this doesn't mean that all of this gets liquidated next day. This is a process. First, there's 180 days where a resolution will be attempted. In some specific cases, a further 90 days can also be given. But basically, at the end of that process, if things have not been resolved, then things do get liquidated. So there is an end point in this. And one more thing to remember is that in some cases, these cases are already in process. So it's not like we are starting on day 0 of that 180. In some cases, we are already well into it. So essentially what happens is this puts a clear, transparent process in place and a clear end to the whatever happens at the end of the process. This is basically what is being attempted, and you now will have the first 12 names where this will be done.
The next obvious question, Sanjeev, of course, is the provisioning part. Now we understand that these are accounts that have been in NPAs for a year, so some amount of provisioning against them would already have been done. But presumably the provisioning required through this resolution process will be higher. And nobody has been able to get an answer out of the government as to why more money is not being given to these public sector banks. Is there a plan in the works, either more money or capitalization through other means? What is the plan on giving capital to these banks, Sanjeev?
So first of all, let me clarify here that we need to have a fix on the number. So far it is an opinion. Only when you actually attempt to resolve or liquidate or whatever, you'll actually have a hard number how big the gap really is, right? Otherwise, we could keep debating forever. So as this process gets done, we'll get a fix on the number. Now, out of whatever that number is, it's not that the whole asset is worth nothing. Many of these assets have fairly large residual values. So ultimately, the amount that you have to really worry about is the amount left over after you've got residual value plus the provisioning. Then you will have an amount that actually has to be dealt with. Now that also the full amount doesn't have to be recapitalized, but some bit of it certainly will have to be, and there are many options in this, which can, we will use the whole range of tools for doing this once we find out what the actual number is. But we have some internal estimates. It is numbers that can be dealt with in various ways, and some may come onto the budget, but a lot of other ways are also there. You could also pare down some of the government's holdings, because government's holdings now are, in many banks, are very high. In fact, they've gone up over the years in some cases. So you could pare that down. There are other, you could create recapitalization bonds, all kinds of, every tool available will be used.
But there is a recognition that it will be more than that 10,000 crore, and you're saying various means, some on the budget.
No, you see, those were being held out to keep the system going, because you didn't have a fix on the numbers. So that was just, just to keep the system floating. But the fact of the matter is, everybody recognized it even earlier. But you see, this can only give a hard number when you have a resolution.
Sure.
When you resolve, otherwise before that it's just an opinion, my opinion versus your opinion.
Sure, got that. Sanjeev, a slightly more sort of conceptual issue. Now, okay, this is the first set of NPAs. Now the RBI has to move to the next set. They have said in their statement that they'll give banks another 6 months and then move to the next set. So this is a process, which is going to go through various stages. There has been discomfort expressed on the central bank being involved in NPA resolution. To your mind, is there some sort of a sunset clause, for the want of a better word, where after a certain point in time the RBI will get out of this process and hand it back to banks? It's certainly not conceivable.
Yes.
So can you detail that for us, sir, please?
Absolutely. So right in the beginning, if you go back to the discussion we were having when the ordinance was put out, we did clarify that this is being done to do for this first 40-50 cases. This is not the normal process. This is a thing that is being done to get the banking system, which is getting jammed up, to get liquid and get going again.
Yeah.
Right? So this is being done as an exclusive for that lot. It cannot be done. It is being customized, done for this lot of NPAs. So this is not the normal process.
After this 50,
so let's
after these 50 accounts for, sorry, I didn't mean to interrupt. You were saying.
Yes. Number two, let me also clarify that this is not an attempt to return back to directed lending. I know this is an issue that has come up from time to time. The oversight committees that the RBI empowers are not going to go to the lenders and say do this or do that. They are going to do three things. One is they will ensure that at least a sizable proportion, at least a minimum quorum of lenders plus the defaulter come into the room and have a discussion. This is the first thing they will ensure. The second thing they will ensure is that whatever process is followed, they make sure the process was correct, and then they certify that the proper process was followed. This is necessary because of fears many people have of future investigations that may happen. So here the certification will mean that yes, process was followed and RBI has certified it.
Okay.
And the third thing that this oversight committee does is that whatever it is that these lenders have agreed to between themselves and with the defaulter, that the agreement is adhered to and people carry out whatever was agreed. This was a major problem with compliance in previous rounds of attempting to solve this. So these are the three things that the oversight committee is doing. The oversight committee is not telling what exactly is the resolution.
Okay.
Otherwise, you wouldn't have to bother with the bankruptcy process at all, would you? I mean, you could just start up one right up front and say, oh, we are going to do this, blah, 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 liquidate that. That is not being attempted. We are telling the lenders to do it. The oversight committee does not have the capacity to figure it. All it has the capacity of doing is making sure the process is followed.
Okay. On the point of the committees, though.
And when this 50 lot is done, by and large, this process will be unwound. Maybe at some future date, it may be revived again. But for this round, this is it.
Okay, that's good to hear actually, Sanjeev. So, Sanjeev, on the point of the committees, now the oversight committees, I've understood the point that you're making. On this advisory committee, which has actually recommended these 12 accounts and presumably will look at the next set as well. I'm not sure if there's a reason why the composition of that committee has not been put out in public domain clearly. The RBI says it comprises majorly of its independent board members. There are two questions there. One, the independent board members are a mix of industry professionals and economists. So the question of whether they are the right people to be making this decision, and two, it's still unclear to us whether there is RBI staff on that committee. Any light you can help us, any light you can throw on both those issues, Sanjeev?
You may want to have this conversation with the RBI.
Okay. Okay, then I have one last question, and this is sort of, on the core sectors. Now, again, it is, while the names have not been made public, we know these are steel accounts, these are power accounts. Do you see
Look, these names will come out very shortly, okay. So I don't think you need to hold your breath.
Okay, no, but my point still is that, these are core sectors where if there is considerable liquidation of assets, do you think the industry dynamics in some of these core sectors, particularly something like steel, could change? I think I'm alluding to, for instance, if
you look at the names, you decide.
But is that something that's okay? Are these sectors sitting on excess capacity in any case?
As I said, it is for the markets to decide these things. These are commercial issues. You take a call. Government is only going to make sure it's a transparent and quick process.
Okay.
After that, the market decides whether there was a good thing or a bad thing is up to the market to decide.
Okay, last question, Sanjeev. Now, we have this 40-50 set of, NPAs that we already know about. There are a couple of sectors where, stress is continuing to emerge in build, telecom and power. In something like steel, the government did intervene in the sector in terms of sectoral policies. In telecom and power, is there thought being given to sector-specific measures that could ease the stress temporarily or perhaps over the medium term?
So you may want to discuss that with the specific ministries. I'm not in a position to comment on that.
Okay, Sanjeev. I'll let you go on that. Thank you so much. Really appreciate you taking the time to chat with us.
Thank you.